This is Horizon's Middle East and Africa, our top stories this morning. Strikes intensify. The U.S. launches fresh attacks on Iran as Hormuz traffic slumps. Tehran retaliates while oil climbs on mounting supply concerns. The chip rout deepens. Asian equities fall as semiconductor stocks remain under pressure. The AI rally faces renewed scrutiny ahead of earnings season. And a fresh geopolitical shock hits sentiment with President Trump unveiling declassified intelligence alleging Chinese interference in the 2020 U.S. elections. It's just gone 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zapisaja in Johannesburg, and happy Friday to you. It has been quite a volatile week, though, for a number of global equities. If we take a look at most of the major benchmarks across the world, let's just take a look at where we're seeing U.S. equity futures right now. As you can see, NASDAQ 100 futures down more than 1%. Thursday was quite a bruising day for the NASDAQ and really for the broader markets. We saw the NASDAQ closing in the red for a second straight day. And underpinning some of this equity price action is continuing concern around AI and cloud CapEx, as we have been talking about for quite some time. What we saw on Thursday, some of the usual AI winners actually dragging the broader market down. We even saw the Philadelphia Semiconductor Index sliding to its lowest levels since May. So still quite a bit to watch, especially as you can see in the Asia session. We're seeing some of that downside still continuing with the MSCI Asia Pacific Index down more than 2.5%. We should note that South Korea is closed today, but we will get some more insight into how the Asian markets are looking on this Friday with Winnie in just a bit. The U.S. 10-year yield not doing too much today. We're seeing yields marginally lower, though. What we are still seeing, though, is still a bit of movement off the back of some of the equity sell-off that we're seeing. The U.S. 10-year yield now at 4.55% there, just about. And Brent crude, of course, is still front and center. We continue to watch the developments in the Middle East. Now strikes continuing for a sixth straight day. Brent crude is up right now nearly 1%, up just about 0.9% there. And of course, we are still seeing Brent higher on the week as these strikes intensify. Brent crude just trading just above $85 a barrel there. Let's, though, check in on how markets in Asia are faring. As I was mentioning, Winnie Xu is standing by in Hong Kong for us. Winnie?
Yeah, good morning, Jen. You would have imagined today to be a bit of a quieter day when South Korea is on a holiday. But in fact, we are seeing the pain being felt by other markets, other of these tech-heavy gauges in the likes of Japan or even Taiwan, both down about 5%. And that's dragging the overall MSCI Asia here down 2.5%, headed for its lowest in about 2 months. Now, in fact, we have Nikkei 225 headed for a technical correction, down about 10% from its June peak, and for the TAIEX index, also about 1% away from that level. So overall, it really is that chip sell-off deepening in Asia. Now, you flip the board and we take a closer look at some of these tech names. Specifically, we have the tech gauge here down about 4.5%, taking its losses to near 20% down from its June peak. Now, when it comes to TSMC, pretty good numbers for its earnings, but you can see that investors these days are really hard to please, and some concerns around the capex spending if this AI spending is really going ahead of itself, and also some concerns when it comes to how the gross profit might be missing the highest estimate when it comes to the street expectation, and overall that is also leading its sentiment lower. We have Japan's Kioxia here down about 16%. Seeing its market cap halved in just the past month. Back to you, Jen.
Wow, a bit of a bruising day. Winnie, thanks so much for walking us through that. Winnie Xu in Hong Kong. We'll check back in with you in a bit. But back to our top story. The U.S. launched fresh strikes against Iran as hostilities across the Middle East continue to escalate and shipping traffic slumped in the critical Strait of Hormuz. Iran responded by attacking U.S. bases in Kuwait, Jordan, and Bahrain, with the Kuwaiti armed forces intercepting 32 Iranian drones targeting vital institutions. White House spokeswoman Caroline Leavitt says Washington acted only after Iran fired on vessels in the Strait of Hormuz.
Iran very much continues to talk to the United States of America and express that they want to make a deal with us. The reason for the recent strikes over the course of the last several days is because Iran violated the Memorandum of Understanding that we struck with them. Specifically, in the Memorandum of Understanding that they signed, they were not to fire on commercial vessels moving through the Strait of Hormuz. And unfortunately, they have made the tragic decision for them to do that.
For more, we're now joined by Onar Ant, Bloomberg managing editor for the Middle East and North Africa. Onar, thanks so much for joining us. So we're seeing the latest series of strikes by the U.S. and Iran. They've been going now for just about a week. What exactly has changed from your viewpoint?
Well, Jennifer, as you pointed out, Thursday night attacks marked the sixth consecutive day that the U.S. attacked Iran, resulting in retaliation from the Islamic Republic. What has been changing over the past 6-7 days is that the American bombardment is getting more intense, and the Iranian retaliation is expanding its scope. We are seeing now attacks on Kuwait, Bahrain, as well as Qatar in the Persian Gulf, and on Jordan further west. But the real changing pattern I think that we need to keep an eye on is the fact that the escalation in the intensity of American attacks on Iran, which have so far primarily targeted Iranian capabilities to track and target maritime shipping through the Strait of Hormuz, although President Trump has been saying that there could be further and more a diverse set of targets in Iran as time passes, possibly next week, including infrastructure in Iran. And on the side of the Islamic Republic, we are seeing the scope of attacks, Iranian retaliation, is expanding day by day.
So how do you read into, Onar, the potential off-ramp options here or return to diplomacy?
Well, there are hardly any indications that there is an off-ramp that's being actively chased or pursued by the participants. The White House and President Trump himself have repeatedly said that Iran is seeking a deal and they want to talk. On the other hand, that is inconsistent with the narrative coming out of Tehran. We have seen Mohammad Bagher Ghalibaf, the lead negotiator from Iran, has been saying that Tehran doesn't see any reason to remain committed to the interim agreement that was signed just over a month ago between the two countries. Now, to be sure, Iran has not said that it no longer sees itself obliged to abide by that interim agreement, but that's clearly the direction of the narrative, and we're seeing baby steps by both countries, including Iran, in that direction.
So more to watch there. Onar Ant, Bloomberg Middle East and North Africa managing editor. Onar, thanks so much for starting us off. Now, Japanese and Taiwanese stocks end the week in a bleak mood, as you can see there, as both markets slide from the pullback in the AI and chip rally. Bloomberg MLive's Mark Cranfield says the speed and depth of declines across Asia's main stock indexes is starting to look like panic selling. Let's get more from Bloomberg executive editor for Asia markets. That's Paul Dobson. Paul, where is some of this downward pressure coming from? This is quite widespread in global equities right now.
It is widespread, and I think that as much as anything else, the selling is begetting more selling, as you said in that panic comment kind of analogy. It's people are being forced out of the stocks because they're seeing the losses and they want to get ahead of them. So it's a lot of fast money that's behind the selling first and foremost. But it's really interesting, because the technology companies continue to report extremely strong results. The market reaction every time pretty much has been fairly unimpressed. So we've got that with TSMC this time. And what I think the concerns are is that a lot of those results are also talking about big spending plans and suggesting a little bit that the costs for all of that spending may be going up. And so that's got people worried about who's actually going to pay for it. Once they've built all of this infrastructure, is there actually going to be demand for it at the end of the day, or will they get undercut by something cheaper in the meantime? And so that has knocked the stuffing out of the technology sector. just now, and people are putting in this rotation trade. They're looking for other parts of the market where they can see a little bit more value as well, having enjoyed the big run up in those technology and particularly the chip shares over the last several months.
And Paul, Bloomberg has reported quite extensively about the leverage ETFs in Korea. How much do you see that potentially having an impact on stabilizing some of the volatility at this point?
Yeah, so Korea's on holiday today, so we don't get any immediate read across from that. I actually think short term it may have been adding to the volatility rather than taking it away. Yesterday there was a lot of anticipation about what the government might or might not say. What it wants to do is prevent any more of those leveraged ETFs springing up, but it's not taking away the ones that we've already got. And it is ensuring that people have a higher starting amount when they're entering into those trades or using those ETFs, but it's not saying no to them. And so the idea that they were whipping up a lot of the volatility isn't going to go away immediately. I think what it expects is that over time people will get more used to those products. People will have more appreciation of the risks as well as the opportunities when using them, and therefore we will get calmer and calmer markets over time as that falls into place. TBC. Let's keep on watching. But what we can say with a lot of certainty is that there's been extraordinary amounts of volatility in Korean individual stocks and in the Korean index overall that has just been getting worse and worse through this year. And I think that extremes of that volatility is also another thing that has been sending maybe some longer term money to the hills as well.
Yeah, you can just see that indicated in the Kospi year-to-date, as we were just showing. Bloomberg's Paul Dobson. Paul, thanks so much for your insights and for joining us this morning. Coming up, Asian stocks are in the red as the chip sell-off deepens. We'll discuss more of the market outlook with Janet Mui of RBC Brewin Dolphin. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Asian stocks are falling as a sell-off in chipmakers deepens. Investors are now questioning whether the tech rally earlier this year went too far, too fast. Joining us is Janet Mui, market analysis head at RBC Brewin Dolphin. Janet, thanks so much for joining us. So you still believe in staying overweight global equities despite some of the volatility and the risks that we see here. What underpins that conviction that you have?
Hi, good morning, Jennifer. Thanks for having us. The positive view is because the global economy is still expanding, particularly the U.S. is still growing very nicely. The data coming in has been on the positive and constructive side, and that leads to still very robust corporate earnings. And of course, that structural AI theme is still pretty much intact despite the volatility we have seen. So obviously, there are risks out there. So what we have is a modest overweight only, balancing other risks such as valuation and sentiment that has been overstretched.
What about the AI theme, though, gives you confidence that it is, in fact, just structural and not maybe a bit stretched?
Yes. So first of all, very recently we had the earnings results from ASML and TSMC, who are the bellwethers of AI demand, and they're still very solid, actually, still posting very strong profits and order book guidance. So it gives us confidence that actually demand across the whole AI ecosystem remains intact. And you also hear many other executives saying that the supply bottlenecks of key AI demand is still pretty much extending until year 2028 to 29. And also, I think companies are seeing increasing benefits of AI. We saw that the company corporate results remain very strong, whereas on the other hand, they have been actually utilizing fewer workers at the same time. And you look at the US data, the productivity growth has been pretty positive. And so I do think that this theme is pretty much intact, despite the fact that it has been very volatile, given the fact that the rally has been probably too fast and too strong.
And we heard our Paul Dobson saying potentially there is some selling, but getting more selling. Janet, can you just speak to what the risks are potentially with that outlook? We, of course, are talking as we still see the Middle East conflict intensifying. And there is still quite a bit of concern around inflation in the U.S. We're hearing that from some of the Federal Reserve governors. What's the risk that you see potentially derailing that?
Yeah, I think to a certain extent, the market volatility could be contributed by the fact that oil prices have rebounded, given that there is a renewed hostility in the Middle East. And there is still one risk factor that we have to keep in mind, because we believe that, for example, the traffic via the Strait of Hormuz will probably never really return to the pre-war level in the foreseeable future. So supply could be constantly being disrupted. So I think markets will have to monitor that volatility in oil prices. And you mentioned U.S. inflation. The latest figures have been a bit more encouraging, but the fact is inflation has been over the Fed's target for many, many years. And I think the key risk is that the Fed will hike interest rates sometime later this year. We think it will be probably a very modest rate hike, but I think that change in direction of interest rate can potentially spook market.
Can we speak potentially to what we're seeing in fixed income, Janet? Because you and the firm still prefer gilts over what we are seeing with treasuries in the U.S. Considering sort of the backdrop of the U.K. economy, what about it is appealing to you?
Yes, so UK gilts have underperformed other major peers because of the sensitivity to energy prices. Now that oil prices have retreated from this peak, we do think that the UK gilt have potential to head lower relative to other economies. And the thing is, the UK economic data continues to be very weak, especially compared to the US. So there's just more scope potentially for the Bank of England to eventually consider easing policy relative to the other key economies. So that's why we believe that there is scope for gilt yields to actually move lower. But of course, we have to watch the political situation. We have to watch the fiscal guidance of the new government and new chancellor potentially, that they all have the potential to actually push gilt yields higher. But we think that the new government, ultimately, they would have to be very cautious in managing their fiscal outlook.
How is it positioned, though, in your portfolio, Janet, when you think about government bonds over corporate credit?
Yeah, sure. Our view is that corporate credit is likely to underperform. We actually have an underweight position in corporate credit, primarily because the spreads have been really, really tight. That may not actually reflect enough of the risk that you're taking. And government bonds such as gilt, they yield pretty nicely, actually. We prefer that. And also, I think the relative preference of government bond over credit is that we actually have an overweight in equities, as we have mentioned. So in case things go wrong, then your overweight in government bond relative to credit it would be acting as a hedge if that's the case.
All right, we'll leave it there with you. Thanks so much, Janet Mui, market analysis head at RBC Brewin Dolphin. Thanks so much for joining us from London there. Now, coming up, U.S. President Donald Trump addresses the nation, accusing China of electoral interference. That story and more next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasadja in Johannesburg. Despite the energy crunch triggered by the U.S. and Israeli war on Iran, fears that we would see new record-high oil prices have not been realized. Bloomberg Originals has been looking at the reasons why. Here's a preview.
Sometimes it's best to expect the unexpected.
When the Strait of Hormuz first closed, everyone was in a panic, and it was the biggest crisis that many of us have seen in this generation.
There are thousands of vessels that are stuck.
Ships are still getting attacked.
They said they control the strait. They do not.
We heard from the International Energy Agency that this is the biggest oil supply crisis ever seen.
It is in the world's largest oil-producing region.
The Strait of Hormuz is responsible for 20 to 25% of the world's oil as well as gas seaborne trade.
So we're talking about 20 million barrels per day.
It also meant that a lot of food supplies, fertilizers, and other essential commodities were stuck.
Ever since the Iranian Revolution in the 70s, the idea that Hormuz has been important has been known.
Through the Strait of Hormuz.
But it's always been a back burner issue.
Oil prices and shortages were expected to soar.
There is worry in the market that there is no end in sight.
That knock-on effect really is being felt.
People were really wondering how the world would cope with such a disruption.
Many of the banks were talking $150 a barrel, $200 a barrel.
But then, it didn't happen.
Markets barely blinked at some of the challenging headlines coming from the Middle East.
The market has been pretty resilient.
Although we did see prices top $126 a barrel, many of those worst fears were never materialized.
We saw the market adjust to the crisis in somewhat surprising ways. Price response actually shows how resilient markets can be.
So how was the biggest energy crisis in a generation so easily swallowed? And does this ability to cope mean the world has reached peak Hormuz?
And subscribers can watch that documentary in full right now on the terminal and at Bloomberg.com. And it will also be up on the Bloomberg Originals YouTube channel in just a few hours. Now, a few other news we're following. SpaceX shares fell in late trade as it aborted the latest test launch of its Starship rocket. CEO Elon Musk says some of the rocket's Raptor engines didn't fire, triggering an automatic shutdown. He says the next attempt will probably happen early next week, with 2 of the engines to be replaced. Starship is central to Musk's ambition to put data centers in space, expand the Starlink network, and send humans to the moon and Mars. Also, Bloomberg understands that Alphabet has delayed the launch of its latest AI model, Gemini 3.5 Pro, as it works to improve its capabilities, especially in coding. The delay has raised internal concerns that the company risks falling behind rivals Anthropic and OpenAI, whose models outpace Gemini's for writing code. And U.S. regulators traced a parasite outbreak that sickened thousands in Michigan and nearby states to shredded iceberg lettuce served at Taco Bell restaurants, identifying a single supplier from Mexico as the apparent source. Taco Bell says it's removing the supplier's lettuce indefinitely from its U.S. supply chain as a precaution. Now we have plenty more coming up. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Strikes intensify. The U.S. launches fresh attacks on Iran as Hormuz traffic slumps. Tehran retaliates while oil climbs on mounting supply concerns. The chip rout deepens. Asian equities fall as semiconductor stocks remain under pressure. The AI rally faces renewed scrutiny ahead of earnings season. And a fresh geopolitical shock hit sentiment with President Trump unveiling declassified intelligence alleging Chinese interference in the 2020 U.S. elections. It's just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg, and it is a Friday. Happy Friday to you. It's been a bit of a volatile week for global equities, and we're continuing to see that pressure still hitting on various parts of the world, markets around the world. U.S. equity futures, as you can see there, NASDAQ 100 futures down more than 1.4%, continuing some of the downside that we did see on Thursday. And again, underpinning much of the equity price action, as we just said there in the intro, is some of the concern around the spending for AI and the cloud, and whether or not potentially some of the spending has gone too far too fast, as we were speaking earlier with our Paul Dobson. On Thursday, we did see a number of former AI winners really dragging down the broader global indices, especially the NASDAQ, closing down in the red for a second straight day. The MSCI Asia Pacific Index, some of the negative sentiment also continuing in Asia. We'll have Winnie Xu walk us through that in just a bit. But we should note South Korea is on a holiday today, but still MSCI Asia Pacific Index down more than 2.8%. The U.S. 10-year yield, we of course have that on the board. Not doing too much, though we are seeing the moves off the back of some of the equity sell-off that we're seeing there. The U.S. 10-year yield at 4.55% just about. And finally, we have Brent crude on the board. We'll speak in just a bit about the intensifying escalation that we are seeing in the Middle East as the conflict, the escalating conflict now enters a sixth day of attacks. Brent crude is now up just over 1% and is going to end the week higher as well. Brent crude trading at just about $85.14 a barrel there. Let's, though, check in on how markets in Asia are faring. Winnie Xu, as I mentioned, is in Hong Kong for us. Winnie, walk us through what you're watching.
Yeah, good morning, Jen. In just the past 30 minutes, we are seeing Asian stocks further extending losses to now nearly down about 3%, still headed for its lowest in about 2 months. Now, it is, as you mentioned, these concerns around AI spending, especially after TSMC's CAPEX spending plans raised some of the concerns from investors that if there's going to be enough ample demand that would be able to meet these spending. Now, that's why we are seeing Taiwanese stocks here down 5.7%, just less than 1% away from entering that technical correction, which means it's going to be down about 10% from its June peak. And doing slightly better, we are seeing onshore CSI 300 shares here down about 2.5%. All eyes are on that World AI conference that is happening in Shanghai. We just kicked off the first day with President Xi having an opening speech, also talking about the AI progress in China. So we will be keeping an eye on the progress in the next couple days. Now, flip aboard, we take a look at Japanese assets because, as we just mentioned, Taiwanese stocks near a technical correction, but we do have Nikkei 225 here down almost 6%, headed for a correction as well. Now, it is, in fact, also headed for its worst one-day loss in about a year. So loss is really deepening in the tech space with Kioxia here, Japan's memory chip maker, down 16%. Seeing its market cap halved in the past month after becoming Japan's most valuable company, topping Toyota in just the past few weeks. Back to you, Jen.
Pretty sizable moves there. Winnie Xu in Hong Kong. Winnie, thanks so much for walking us through that. Now, despite President Trump's warnings of escalated military strikes against its critical infrastructure, Tehran refuses to back down or reopen the blockaded Strait of Hormuz. The escalating defiance has turned the vital shipping waterway into the volatile focal point of the widening conflict. Joining us now is Mehran Kamrava, professor of government at Georgetown University in Qatar. Thanks so much for joining us, Mehran. Let's just start here because we have seen renewed tensions now escalating for a sixth straight day, despite some of those warnings that we were just mentioning. What do these new round of attacks signal to you?
Well, they're an ominous sign of more to come, worse to come, in fact. What we're seeing are very strategic attacks on Iranian roads, railroads, paved roads leading to major cities in the south, like Bandar Abbas. And despite the fact that Vice President Vance has said there is no plans for ground invasion of Iran, I think the Iranians are gearing up for at least one or two of their islands in the Persian Gulf being occupied. And that is an ominous sign because what we've seen historically is that Iran does not necessarily yield in these instances and lashes back. And so places like Dubai, Abu Dhabi, Doha might, in fact, be additional targets in addition to places that are already on Iran's target list, like Manama, Kuwait City, and elsewhere.
You're in Doha. You were just mentioning. We were just mentioning that, of course, Qatar has been intercepting missiles. How much is it a concern that Qatar, which had been a mediator throughout this process, is now potentially being targeted?
Well, this is certainly an escalation. This past week, what we had here, a state funeral for the former emir, Sheikh Hamad, who passed away. And so there were no attacks. But what we're seeing is a resumption of these attacks. One of America's biggest military bases is here, in fact, about 30 kilometers south of where I'm located right now, Al Udeid base. And so what we're seeing is Iranian attacks at American targets, both in Qatar, which is a mediator, and more importantly, in Oman, which has historically had very close relations with Oman, with Iran, rather.
If we are potentially going to see the worst to come, as you were just pointing out there, what does that mean for a diplomatic off-ramp?
It makes the task all the more difficult. I think both sides are eager for some sort of diplomatic resolution. Neither side wants to see this escalation as it is happening, but both have become dependent in a path of an escalatory cycle from which they cannot back out. And so this is becoming, this tit for tat is now assuming very dangerous proportions in the sense of attacks and counterattacks on critical infrastructure in Iran and elsewhere.
So then how do we read into what will be the determining factor of what happens next, Mehran? I mean, is there somebody who could step in, or a state that can step in at this point? Or is it really just the two leaders of the U.S. and Iran?
We desperately need, Jennifer, mediators. We need adults in the room. Countries like Pakistan, Oman, Qatar, and even Egypt and Turkey need to step up and put pressure on the White House to stop its escalatory cycle. This latest round has been an escalation on the part of the United States. And as I mentioned, these attacks that are very strategic on critical infrastructure in southern Iran are occurring with increasing frequency and deadliness. So we really desperately need diplomacy here. And I think a country like Qatar and Oman are even more reluctant now to join in because their efforts in the past haven't borne fruit.
Well, and earlier in the week, Mehran, we had thought potentially there was a bit of conflicting messages about what was happening with the Strait of Hormuz. How much does that play a factor into pushing diplomatic resolution forward?
That is the primary issue right now on which the Iranians and the Americans are fighting. The Iranians are determined to hold on to the Strait of Hormuz as a source of leverage and a form of deterrence, administratively at least, and the Americans are determined to ensure that that does not happen, although it's somehow vaguely mentioned in the MOU. And so I think if the Iranians, the Omanis, the GCC countries can come to some sort of understanding regarding the Strait of Hormuz, at least this current round of tensions could be resolved.
What would that look like, though? What would be an ideal agreement then for the Strait, in your opinion?
Well, I think there's definitely room for win-win scenarios. I think the problem is currently everybody's looking for zero-sum scenarios. The Iranians want it all and the Americans want it all. And I think there could come to some sort of solution whereby everybody gets a little and no one is isolated or thoroughly marginalized. And I think, there's always room for diplomacy. Diplomacy is the art of the possible. And the problem is that in the current radicalized moment, there are very few reasonable, kind of rational people who could sit and come up with win-win solutions for everyone.
Well, we'll wait to see how that develops. Mehran Kamrava, professor of government at Georgetown University in Qatar, we really appreciate you joining us and bringing your analysis. Thanks so much. Now, for a look at some of the other stories we're following today, Chevron expects to sign preliminary agreements with Iraq to invest in large oil fields and a pipeline to bypass the Strait of Hormuz. The agreements are expected to be non-binding, but will show Chevron's commitment to eventually signing commercial deals for the West Qurna 2 and the Nasiriyah fields. The U.S. oil giant has been in talks to invest in Iraq for more than a year as it seeks to expand its footprint in the Middle East. Chinese President Xi Jinping has made his first appearance at the World AI Conference in Shanghai, where he urged international cooperation on AI governance. It signals the growing importance that Beijing attaches to the technology amid its rising rivalry with the U.S.
We should strengthen risk awareness and ensure that AI is secure and controllable. AI should be a trusted tool for humanity.
And coming up, President Trump uses a White House address to accuse China of meddling in the U.S. elections. We'll have the latest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. President Trump has accused China of interfering with the U.S. elections in 2020, threatening to upend ties with Beijing as he focuses on securing a victory in the midterms in November.
Over a period of years, starting during the 2020 election cycle, the People's Republic of China carried out what is believed to be the largest compromise of election data in history, resulting in China's illicit acquisition of 220 million U.S. voter files. That information includes names, addresses, phone numbers, political party preferences, and other sensitive data that would be needed to register to vote.
For more, we're now joined by Bloomberg's Jill Deesis. So, Jill, we just heard a bit there of what President Trump said. What else stuck out to you from his address, specifically on election security?
Yeah, Jen, I think that it's really important to put some of these Trump comments into this broader context. This was a really remarkable speech, remarkable use of a primetime address by a sitting United States president, where you saw him kind of run the gamut of all types of claims about sort of election fraud or election security here. Obviously, those China comments are getting quite a lot of attention. I do want to point out that some of the documents that he's claiming were released that sort of predicated this speech involving some of that China information were redacted. He was also repeating, several claims about the 2020 election, which have been really kind of a drumbeat ever since he lost that election to Joe Biden. So you do have, various other elements, some of which were previously known, some of which have been refuted by various intelligence agencies. But again, kind of all wrapping up this idea of sowing a lot of doubt, first of all, ahead of this really critical midterm election in the United States coming up in November. But I think the China claims in particular, which I do want to point out, China has refuted. They say that they do not interfere in U.S. elections, but it's really coming ahead of an expected summit between Xi Jinping and Donald Trump later this year. So I do think that kind of raises the questions as to whether or not that's kind of set to raise tensions as we get closer to that anticipated meeting.
Yeah, and Jill, we also heard a bit from the president about the economy. Specifically, he was touting in the inflation decline, though we know that, of course, we have been watching inflation quite closely here, and it still remains elevated. Some critics accusing the president of distracting from what is happening with the economy and the Iran war. What are you seeing?
Yeah, so I mean, a lot of those critics, which I will point out, come largely from Democrats in the opposing party in the United States, are saying, that this, is an inappropriate use of a primetime address like this. Again, I do want to point out that it is quite unusual. You would expect a primetime address coming from, the United States president to involve some kind of, significant military action or policy announcement or something like that. So the fact that he's using it to sort of address, again, claims that he's largely made in the past here in terms of concerns around election security and fraud and everything like that, I think it does sort of raise that specter of what's he trying to turn the conversation, the narrative to. I mean, we do know that going into the midterm elections in the United States later this year, massive domestic issues involving price increases, inflation, fuel prices, all of these are really on the minds of American voters. And you have to think that when you're looking at some of the fallout from the war in Iran started earlier this year, a lot of the pressure on energy prices that kind of weighs into the equation here. I mean, the war itself, which continues to drag on despite those efforts to sort of negotiate a peace deal, is, becoming more and more unpopular with the American public. And, if you're Donald Trump, you're looking to shore up support for the Republican Party and for Republican Party candidates going into the midterms. I think all of this is, certainly something that is in the mind of the United States president. And I think, we're kind of looking at how that dynamic is going to unfold as we get closer to those November elections.
Certainly. Always great to have you. Jill Deesis, thanks so much, Jill, for your reporting, for joining us. Now, for a look at some of the other stories we are following from the region here. South Africa is targeting $46 billion in new investments by April into specialized industrial hubs to revive its manufacturing sector. The initiative is key to the nation's growth strategy as manufacturing share of economic output has plunged to 11% from 24% in 1994. The steep decline has been caused by chronic power shortages and transport bottlenecks. Mozambique's president, Daniel Chapo, says the country is making progress towards a debt restructuring deal with China. China is Mozambique's largest bilateral creditor with about $1.45 billion in outstanding loans. Mozambique is seeking to shore up its finances after the IMF warned earlier this year that the country's public debt is in distress. And coming up, we turn to the UK. Andy Burnham prepares to unveil new policies ahead of taking office as the next UK Prime Minister. We'll discuss what to expect next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Bloomberg understands incoming UK Prime Minister Andy Burnham is preparing to announce new drilling for oil and gas in the North Sea within days of taking office. His plans also include taking public control of Thames Water, England's largest water supplier. Burnham is set to give a speech today, his first since being confirmed as the next UK Labour leader. To discuss, let's bring in Bloomberg Markets Today editor Morwenna Koniem, who joins us now. Morwenna, thanks so much for being with us. So, how will these drilling plans go down in the Labour Party? How do you expect it to be reacted to?
Well, they are a bit controversial because it's something which others have been, lobbying for more renewable energy development. So I think any sort of license for more drilling is something that has been talked about for a long time. And I think in the most recent sort of decade, it hasn't been something that's had very much traction. Of course, the country is looking for greater energy security, particularly amid the situation in the Middle East at the moment and following the war between Russia and Ukraine. So but it's certainly not going to go down well on all camps.
And that might just be one part of what we hear later today. If we do, in fact, hear it from his speech, what else are you expecting to hear?
So I think we'll be quite interested to hear anything that relates to economics. I mean, certainly the markets team that I work on, that's really what we're focused on. We haven't had a huge amount of details so far. What we are seeing is quite a few warnings. The IMF has been sort of warning him against announcing a higher rate of sort of income tax on the top rate, pointing out that measures like that in a country which is already very highly taxed actually risk sort of stifling labour productivity and growth more than they actually gain. And we're in a situation now where wealth taxes are actually quite hard to gather. And so whether it actually risks causing more harm than good, I think is something that's going to be in focus. We are also expecting an announcement of plans to take Thames Water into national ownership, public ownership, and that is something which I think the public may welcome. Thames Water is sort of notoriously indebted and been looking at a rescue plan, which has been going on for quite some time now. There's been numerous problems with wastewater management and leaks, and that's actually impacting people's bills. So that is likely to be a broadly welcomed measure, and that's what polling shows among the public. I think otherwise, how many actual sort of policy details we get, and remembering that he's taking over a party, without a new mandate. This is based on a general election campaign for the 2024 election. I think it will be quite interesting to see how much he does try and announce.
Bloomberg's Morwenna Cunningham, plenty to watch out for there, Morwenna. Thanks so much for your time. And before we let you go, major cities across North America are experiencing dangerous levels of smoke as hundreds of Canadian wildfires send plumes across the continent. Take a look at those pictures there. Air quality alerts have been issued for New York City and in Chicago. The quality is severe enough to be considered hazardous to health. That is it for Horizons Middle East and Africa. Of course, you should stay with us for Daybreak Europe. That's coming up next with Oliver Crook. This is Bloomberg.